Guys, this is crazy. The US will start quantitative easing as early as this week, and I have proof to show it to you. If you were around the last time when it happened, you know exactly what's going to happen here with crypto and Bitcoin as early as some point this week. If you think that is interesting, make sure that you are subscribed to the channel, like this video, and activate the bell so that you will print money with us together here and never miss out on these important updates. And now let me show you how crazy that is and what they're actually going to do here. So I have to explain you first, before we are talking about the screenshot here, what they are going to do. The US is going to do a treasury buyback. Now, why is this leading to quantitative easing? Really simple. The US government is going to buy back treasury bonds before they are maturing, so before the contract is expiring of that bond. And they can only do that in two simple ways. Either they do that by injecting capital that they have, but everybody knows when you look at the debt clock of the US that they don't have the money, or they go and print the money to buy these bonds back. And then what do you think is going to happen with the money that was used to buy back these bonds? This money will be re-injected into the capital markets to prop them up, exactly the same what happened the last time during the last bull run, when we saw multiple times quantitative easing happening. So there is right now a shift from quantitative tightening, so where we saw interest rates going up, now into a pivot where we are going the other way and starting to do quantitative easing again. So and here you have the schedule where they are going to start the treasury buyback, and you see here tentative schedule. So they are going to start this on the 29th of this month. So in 2 days US time, they are going to do quantitative easing, and you see it's going to be settled the following day. So they can do up to 2 billion and they can buy up to 20 securities. So and they can do this every single time. And look at this, look at the schedule. It's basically every week that they are going to inject capital into the markets. And this will prop up everything, guys. Like the last time, I give you a really stupid example before we move on here. 2 years ago, I was in on the small island where I own a club in Greece. And I went to the biggest beach club there. And I met 18, 19-year-old guys that were already sitting there with a $20,000 Rolex. And I was like, what the heck are these guys doing that they can afford these Rolexes? So you have to know, in that specific case, it was financed by their parents, but still, that was my wake-up moment where I saw the ripple effects of all that quantitative easing that was happening in 2021 during the bull run, when I saw 18, 19-year-old kids next on the table to me, because they also had a table, with Rolex watches. And I was like, this is insane, you know? So I could have never dreamt to have a Rolex watch when I was 18, 19 years old, especially not a new one, you know? So just that you understand. So, and this is going to happen now again. When we are then going further and look at why they actually can do that, then we have to look into the monetary policy. And here is a law that basically allows them to do that, to print money to buy back these bonds. So I don't want to bore you now with the whole text here, because it's, let's be honest, this is quite boring to read. But if you want to read that, basically just stop the video, you know. So look here, now I scroll to the next section and to the rest of it. So either you look it up yourself, you know, so because here's the paragraph under which you can find that with the title and everything, and otherwise just stop the video and go and read if you want to read that. I believe, for the simple reason that the schedule was out for a month, that smart money was moving based on that already on the 1st of May. Because when we go into Glassnode, what we can see is that here is an increase in whale activity. Here, if we go to May, here, end of April it started, you know, so we had here a drop, let me actually go only to May. So look at this here. 30th of April, the bottom for this year, where we were the lowest in terms of whale activity. So you have to know the red line is the whale activity, you know. So and then it started going up. From there, it started slowly creeping up. Not a lot, but it started going up. So actually, I need also the other line here. So here, balances with under 1,000 Bitcoin and balances with 1,000 to 10,000 Bitcoin and above. So you see both lines were starting to climb up, a soft angle to the upside from the 1st of May. So I believe that they are slowly buying more and more Bitcoin because they know the quantitative easing is coming, because they know this will have a ripple effect on the market, and because they have seen it before where markets were exploding when we got quantitative easing injected money into all markets. Now on the weekly chart for Bitcoin, we can see that we are having a hidden bullish divergence. So let me actually click on this. Look here, hidden bullish divergence. Price is going up, RSI is going down. So this is exactly what we are seeing here right now. RSI going down, price going up. But now I believe that we are seeing the first signs of that hidden bullish divergence playing out. So here you need to know a hidden bullish divergence is a continuation move, usually from a previous move. So the previous move was here, that move here to the upside. Now, for the hidden bullish divergence completely to run in full effect, I believe that we need to get above the prior green candle here of that move of $70,000 approximately, $70,500. More or less. And you see that this is quite a safe play when you look here at the past, you know, where we had a proper bullish divergence here, price going down, RSI going up, and then we saw price oscillating to the upside with the RSI, and we moved up roughly 100% from here, from that bottom point. You know, so look at this, it's like 101%. If we would do the same now from here, let's say, and we move up 100%, then we are at $120,000. So could it be the cycle top? Maybe. Could be the bull run top. We don't know yet. Personally, I believe we go higher. I don't believe that we stop at $120,000. So, but it could be one of the next targets here on the weekly chart based on the divergence that we are seeing. Also, the stochastic RSI is here nicely going to the upside as expected. So I definitely believe that we're going to see here a nice move this week above $70,000 once that money from quantitative easing is hitting the markets. Until then, here on the daily chart, things remain kind of boring. We are still oscillating here in our bullish territory between the mid-range and our resistance level. Here, if we want to see any attempt to move in direction of $74,000, we need to get above $69,700 here. And we need to do that, basically in the next 24 hours. If we are not doing that, I expect a small retracement back to the downside where we are testing $67,000. That is a good point to re-long Bitcoin if you longed it already. And if you have not longed it yet, it's a good moment to open a position at that point. Otherwise, $69,700 might be the level from where I would be looking for opening a position right now. Then when we're going into the 12-hourly chart, you see another reason why that is a good level, because it would be above our golden ratio that we are talking about for quite a while now at $69,500. We are breaking back into this support area here of $68,300 to $67,800. Here, the indicators telling also a clear story. In 17 minutes, this 12-hourly candle will close. And I believe that we are then finally completely bottoming out on the indicators. We are heavily oversold already on the MACD and on the stochastic. The RSI is still holding bullish territory, which is telling me that we could see in the next 12 hours a start of a reversal, especially if more crypto YouTube channels start talking about the quantitative easing that's about to happening here in the next 48 hours. When we're looking at the 4-hourly chart, really simple here. We don't want to lose the EMA ribbon. The price is eating into the lower end of it now. As long as we are staying above $68,000, I'm not really worried about that. I get worried if we close below $68,000, get a retest, get rejected, from that retest and break below $67,500, then there is some level of concern that you should have. Otherwise, here on the liquidation levels, we see here a lot of over leveraged long shorts coming in. So that will be a juicy squeeze once we're tapping into this above the $72,000 area. Below is also some over leveraged long positions, so they might get liquidated here with a quick flush to the downside before we see that move here to the upside. And when we're looking at the liquidation heat map, then here you can see since yesterday, not a lot has changed. We are basically holding still the same support level that we were at yesterday, and resistance is also still here at $69,600. Hence, the $69,700 level that I managed to open a position, because I believe that once we are breaking above $69,570 approximately, that we're going to see a squeeze here to like $71,000 more or less. The 1 hourly chart was not really interesting today, so we are not wasting any time with that. And now let's have a look at the Bitcoin dominance. So the Bitcoin dominance is falling here while Bitcoin is holding more or less the level that we are at. And that, of course, is positive for some altcoins, not all altcoins. So if Bitcoin would go up here and the dominance would fall like this, that would be the best case scenario for us. So, but maybe we are going to get that over the next 12 hours, where we see Bitcoin returning back to the upside above $69,000, the dominance still falling in direction of 53%. That would be really an interesting session to trade for me personally. So 53% might be the next area where the dominance is going to stop to fall, where we see some consolidation, maybe even a spike back up, because Bitcoin maybe breaks the all-time high or something like that, so but then rolling over and continue to the downside. The USDT dominance is also still going sideways. Remember, guys, I told you that this is something we need to expect at some point, that the USDT dominance is going sideways, where we are not seeing a lot of action in the market. But once that move is done, we should continue to move to the downside here. And guys, don't forget, if you want to trade with me together, then go to BYBIT. You still get $30,000 if you use here the link down below. And if you don't want to trade with KYC, do it on Margex. Also there, you can just copy trade me if you like with the link below. And on BLOFIN, you get still $7,500 plus 10% on your initial deposit in cashback, which is amazing. Use the link down below here. And if you're in the UK or in the US, use BITGET or Phemex. These are my preferred choices for people that cannot use actually BYBIT. So go check out these links. They are in the pinned comment below and in the description of the video, and you're going to support the channel, which would help me out quite a lot, guys. So I appreciate that. Let's have a look at Ethereum. The Ethereum Bitcoin chart is breaking out to the upside. We were expecting that. Remember, I told you once we are seeing this, I believe that Ethereum is moving in direction of $4,000, and this is actually the case today, that we're moving into that kind of direction. So if we can close the daily candle as it is, that would basically confirm that the underlying area was broken, and that the next level will be 0.06 Bitcoin against Ethereum, and that will potentially print almost a new all-time high for Ethereum once we are breaking through that. So because when we go here into the dollar chart, you see we are trading around $3,900 here. We have tested 3,970 today already and got again rejected. But you know the drill, guys. The more often we are testing a level, the weaker it gets, and at some point is going to break. So here, the short-term support that is just below us from 3,870 to 3,815 should hold for the time being, because as you can see, that was also prior resistance. And we had here a big deviation that was also telling us that here's some resistance. As long as we are closing here also the daily candle above that level, I expect maybe 2-3 days, and then we are above $4,000 again for Ethereum. Solana, our new trade setup is starting to grow some legs here. We are running here into our resistance of $167 to $170 here right now. Once we are breaking back into it, I'm not a huge fan, guys. I'm gonna show you something. So here is potentially a W pattern, But I'm not a huge fan of a W pattern like that, because for a proper W pattern, you need to have here the lower low. So this wick should have been longer, and here the higher low. So not a huge fan of that, you know. So, but sometimes these W patterns, I call them distorted W patterns, they are still playing out. So here in that case, if we break $170, you can treat this as a W pattern, and then you get a technical target of approximately $180 more or less to the upside. And once we are reclaiming that level, we are moving finally in direction of $200. So, but of course, we have also some really bullish indication here right now, and that is on this 4-hourly chart that we are above the downward sloping trend line, and we are waiting for that break. So if you caught yesterday or today that move, amazing. If you are a little bit too late, it is still a good moment to enter this trade. Just be aware that you should trail your stop loss up also then by like $2 to have the same risk to reward ratio. Here on the daily chart, you see the reason why we are stalling a little bit, and that is because we are in the golden ratio, but the golden ratio is holding as support right now. You see here the stochastic already turning around, giving us potentially tomorrow a buy signal. The MACD, the signal line would bounce off the trend line, and the RSI is also bullish today. Yeah, really tiny bullish divergence here, you know, price going down, RSI going up. Confirmation for that would be a break above $170, and like I said, expect a move to like $190, $200 following a breakout. Then let's talk about some coins that are soon going into price discovery. One of them is Pendle. So I hope that you actually caught Pendle all the way down here when I called it at $4.50, because we are like almost 2x up from that. So look at this. So we went up 76% here on the way up. So, and soon Pendle is going into price discovery. So when do we go into price discovery? Once we are breaking $7.55 more or less. So because that was the all-time high for Pendle so far. Remember, that is a quite new coin. The indicators all telling me and screaming here, let's go to the upside, you know. So we see selling leaving the MACD, selling pressure is leaving and fading out, and we are getting soon here a bullish crossover on the MACD. The RSI is going to the upside. Stochastic just printed a buy signal in the last 4-hourly candle. So once we are breaking here the $7.16 level, expect that Pendle is going to fly. So, and I either gonna long it from here, or if we get back to like $6.70, that is also a level where I start scaling in a new Pendle position. So that's what I'm looking at. Then Rune also tries to break a key level here right now of $6.97-ish. Once that level is broken, I also expect here a quick move into higher levels to $7.40 and potentially all the way up to $9. If we get a massive rejection from that level here back to the downside, I will only add to my to the position that I have between $6.75 and $6.63, because the indicators also still want to go up here. Overall, only the RSI is going a little bit sideways, but still bullish momentum on the MACD and on the RSI, so I kind of ignore the RSI. And also price action shows clearly that bulls are in control with this massive wick here of the current candle over the last 4 hours. Then ARBITRUM also breaking out of that former resistance area, now potentially support. If we close now in 7 minutes the candle as it is, it should be confirmed. And then the next target is $1.39, and above that $1.54, and then $2. If you have missed to enter at the break here of that downward sloping trend line, then also this current level is not the worst to enter a trade. Again, just adjust your stop loss by like 2 cents. My stop loss is here at $1.15, so you need to have a stop loss at $1.17, because we're a little bit, we are 2 cents higher than from where I entered this trade. Link is another one. Once we are breaking here $17.42, that is your level where you want to enter. if you're not in a trade yet. If we come back to the trend line to $17, that is the other level where you want to enter. Here on the 4-hourly chart, everything is super bullish here right now. RSI to the upside, lighter green, red candle on the MACD with a potential buy signal in the next 8 hours, and the stochastic at the bottom pointing to the upside. So a lot of momentum in Link here also right now, where you can potentially open a position. And our WIF trade is doing pretty well. Here we just need to break the $3.20 level. I remember, guys, I opened a new trade. I put it also again here in the spreadsheet. The link is in the description, guys, and in the pinned comment if you are looking for that, you know. So I just need to add here also the LDO position that closed in terms of gains. I still did not have time to do that, so just that you know, I'm aware of that. So here, if you are waiting for an opportunity to enter with either $3.20, a 1-hourly close, no, let it be a 50-minute close, 50-minute close above that, but tight stop loss at like $3.08, I would say. So that is a 3% stop loss, guys. Just that you know, 3%. So don't over leverage yourself. I would enter with maximum 10x leverage, and the target is $3.68. So if you enter from here to $3.68, there is a 14%, almost 15% against a 3% stop loss. That is a risk to reward ratio that is worth being taken. But yeah, just be aware of that, you know. So WIF is quite volatile, and here we have actually a proper W pattern. So once we're breaking that line here, then also here, this is, yeah, basically the same level, $3.67.5, $3.68 is the target of that W pattern once we're breaking above $3.20. Guys, that's it already for today's episode. I hope you enjoyed it and that you're looking forward to the quantitative easing that's coming. Don't forget, smash up the like button, hit the subscribe button, hit the notification bell, and I'm going to see you then tomorrow.